In this week's Property Insider video, Dr. Andrew Wilson and I have a look for some clues in the news as to what's ahead in our housing market. For example, Australia's biggest home lender has increased its forecast for home prices for the balance of the year. We also look at housing approvals, the latest CPI figures, retail spending, and what the first auction weekend for the spring selling season tells us about what's likely to be ahead. If you want to keep up to date with our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. The nation's biggest home lender, Commonwealth Bank, has upgraded its house price forecasts, aligning with the optimistic outlook shared by the other big banks. Now, only a few months ago in May, the CBA revised its original forecast that home values would fall 6% this year. Instead, in May, they suggested they'd gain 3% by the end of December. They've already done that, so now they've upgraded their forecasts again. In their words, due to the unprecedented surge in immigration, I think we knew about that, didn't we? And the ongoing supply shortage, and they've now forecast a 7% increase in 2023. Now, while the strength and the resilience of the housing markets has taken some economists by surprise, my housing markets chief economist, Dr. Andrew Wilson's forecasts from earlier this year, well, they seem to be playing out as predicted. The nation's housing markets rose again in August, with My Housing Market reporting the national capital median house price increasing by 7% over the month. And that was the 7th consecutive increase in monthly national house prices. And while the growth in house prices is slowing a little bit over winter, some are wondering what's ahead for our property markets. So today we're going to look for some clues in the news as Dr. Andrew Wilson and I discuss some of the latest economic statistics that came out over the last week. Hi, Andrew.
Yeah, good day, Michael. And of course, interesting, but probably no surprise that we've had another revision in forecasts from one of the big banks. As you said, perhaps a little tardy to come to the party, but I'm not sure that the reasoning behind it is as they're putting forward, particularly the immigration story. I mean, that's really suggesting that most immigrants come into this country and buy a house sort of straight away. The vast volume of sales that are occurring are from obviously local residents that have picked up on particularly those value opportunities with prices still below their peaks in Sydney and Melbourne of a year ago. So it is those perceptions of value opportunities, very strong economy, and of course, a chronic undersupply of housing that's driven higher prices. And we really do, I guess, struggle to understand some of the reasoning behind the outrageous forecasts that have been made traditionally regarding house prices, and particularly by the big banks, who you would have thought, given their business is home lending, and that means they should be spot on in terms of what's happening in the housing market, not to be outrageously incorrect, as most of them have proven to be over the past few cycles. But nonetheless, we certainly do have a robust housing market at the moment. And of course, this weekend we had our first results for the spring selling season, Michael, which is traditionally the strongest period of the year. So interesting to see how we pan out there. But we are going to end up this year, by and large, with solid to strong result.
Well, let's look at some of the news that's going to give us some hints about what's ahead. And housing approvals came in again. And the latest figures, I guess, put some doubt on the labour market's target of building so many new homes, maybe 250,000 new homes, 240 housing starts each year for the next 5 years.
Yeah, it's no real surprises with the trend for building approvals, Michael, home building approvals. They continue to decrease. Of course, from month to month, we can get a strong rise, and that's because, as we saw a couple of months ago, you can get a very large development approved. We saw that in Sydney, where there was over 4,000 units approved in 1 month, but that's certainly atypical. And once we move past that unit volatility process, we get back to the underlying decline in home building. And no surprises, we've seen that trend reasserting itself over June, where we saw overall approvals down by 8.1%. Units were down again 15.8%, and houses were up by just 0.1%, so they were flat. So no real surge there. There's no sense that those targets that governments are now promoting in terms of home builder numbers are going to be reached. Of course, it's not the federal government that builds the houses, it's the private sector, and they have a number of headwinds to face in terms of the usual headwinds, which of course we know are planning restrictions, green tape and red tape, but also we have very strong or rising and very high home building costs, which even though they have declined, are still rising at double figure rates annually at the moment. So that's why we can't build enough houses to match our populace and our demand. And likely this trend will continue. And of course, all it means is that it puts upward pressure on rents and prices. And when we look at the state breakdowns over June, we saw that Victoria was the underperformer, down by 18.3% over the month.
Now, one of the other things we look at is retail spending. We want to see how the Reserve Bank's rise in interest rates has affected Australian hip pockets. And the retail turnover figures for July were released over the last week, Andrew.
Yes, and we saw a slight uptick in retail sales, up by 0.5% over the month, now increased by 2.1% compared to July 2020. That rise offsets the 8.8% fall over June to some degree. And we have seen the ABS focusing on particular reasons why we've seen this recent volatility in retail sales data. In periods where normally we would have seen stronger growth, we've seen weaker growth, and conversely, where periods where we've seen weaker growth, we've seen stronger growth. I'm not sure that the reasoning is as it's been promoted by the ABS, weaker spending over the end of financial year sales, extra discounting, however, over May. And I do think we're still having some issues with that seasonal adjustment model from the ABS. But look, nonetheless, the growth in retail sales, even though it was a positive number, we're certainly seeing the trend for retail sales easing away from the very strong uptick that we had last year. Even though we're getting positive growth, the underlying trend is weakening. And I think that that's good news for the Reserve Bank, justifying its wait-and-see approach over recent months in terms of interest rate settings. So we're still spending, Michael, but not as at the rate that we were. And of course, this doesn't take into account the increase in the actual value of sales, particularly given how we've seen prices rising over the past year. So as I said, I think this is good news in a sense for those that are looking for a sustained pause in interest rates. It just does add another factor to the decision making from the Reserve Bank. And, they're likely to feel a bit more comfortable about their recent pauses, given that these signs are now emerging of easing economic activity.
Well, another reason they're going to feel more comfortable with a pausing status is the July inflation figures. We're now getting the monthly figures rather than the quarterly figures, and they seem to be placing a little bit of store in these results.
Yeah, I guess it's a bit tough to wait those 3 months for the quarterly figures, Michael, and the focus, particularly from the media, is on the monthly figures as they come out. So I guess we're using that now as the key guide in terms of what's happening with inflation. And of course, the Reserve Bank sets interest rates on a monthly basis, so they're looking for some monthly data as they get with other economic factors such as retail sales and the labour market. But headline inflation continues to track downwards. It fell to 4.9%, so under 5%. Of course, this is not an experimental model, but it's a new model, so we need to take it to some degree with a grain of salt, Michael, but down to 4.9% over the month. And I guess it's the trend that's important and not necessarily the headline numbers that we should be focusing on. And of course, that followed a fall from 5.6% to 5.4% over the previous month. So continuing strong falls in inflation, headline inflation. We also saw underlying inflation ease as well, Michael, over July, down to 5.8% from 6%. Didn't ease quite as much. And of course, I guess that even though this is good news in terms of the trend, in terms of interest rate settings from the perspective of the Reserve Bank, nonetheless, that underlying inflation remains at 5.8%, which is well ahead of the 2 to 3% target that the Reserve Bank has for underlying acceptable inflation. So still some hard yards there to travel. I think it's interesting when we look at the international experiences by comparison. The US has a lower inflation rate than Australia, significantly lower, but it has significantly higher wages growth. And I think this is in a sense, the elephant in the room is that real wages are falling quite sharply now in Australia, even though we are seeing a decline in, or continue to fall sharply, even though we're seeing a decline in inflation. When we look at the breakdown of the July inflation data, Michael, again, the most significant contributors to inflation were housing and fuel. And the relief from inflation over the month was contributed to significantly by fuel, where fuel costs were down 7.6%. Now, of course, we know the price of oil has fallen sharply over the past year. That's been a key factor in headline inflation falling. We see that every month, that it's fuel that's pushing the inflation rate downwards. And it won't be till we move out of that very strong growth period of a year ago, or those high fuel costs of a year ago, that we'll start to get a more balanced view of current inflation forces. But just on that, we're now starting to see the price of oil push up towards $90 US a barrel, which is a concern. We moved under $70 US a barrel a couple of months ago, and of course we're still well below the $1.20 plus we were paying at the peak in the middle of last year for US dollars per barrel of oil. So still not out of the woods, clearly. But again, the data is still supporting the pause regime, I guess. The Reserve Bank looks to be more comfortable with currently. And all the data sets are certainly pointing to perhaps another pause going forward.
Well, this month it was petrol, as you say, fruit and vegetables. But interestingly, holiday travel and accommodation contributed to the fall in inflation. From what I hear, everyone was off in Europe and in Asia on holiday, so that surprised me. But one of the things that worked in the other direction were rents. Rents went up a lot over the month, and in fact, new dwelling prices rose as well. So there are factors pushing up inflation and others. It's that basket of goods that the Reserve Bank looks at. I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process. It's not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Now, as you said at the beginning, it was the start of the spring selling season, the time when more vendors usually put their properties on the market, more buyers are out, and that's going to give us an indication, I guess, the first weekend of what could be ahead for the last quarter of the year, the last third of the year in our housing markets, Andrew.
Yes, Michael, we've really had signs, as we typically get through August, of the spring bounce back, the beginning of the spring selling season, particularly with higher listing numbers, and we've seen that occurring over the past few weekends. Results have been really holding up despite the surge in listing numbers, perhaps with some exceptions, but it was another weekend of steady auction results to begin the official start of the spring selling season, and still with clearance rates that you would suggest were generally favouring the sellers overall. Despite those higher listing numbers are not acting to drag down clearance rates, it seems to be still positive appetite for property despite higher numbers of listings. I guess that reflects the positive sentiment that we have overall from buyers and sellers. And, we look to the interest rate decision this week. And if it is another pause, that'll only add to momentum for the spring selling season upcoming. But if we look a little...
Before we go into the figures, Andrew, people are saying, give more listings. That just means there's going to be more supply and prices will go down. But they forget that a lot of these people putting their properties on the market are buyers as well. So sellers are buyers. They've decided now's the good time to change up, upgrade or downsize, right size. So more buyers are in the market as well to take up all these extra listings.
That's right, Michael. And I think that the extra seller numbers are reflecting confidence from sellers that they know that there's strong competition currently in our auction markets, clearly evidenced by those clearance rates. Those, as you said, that are now selling now to buy later are taking advantage of that strong competition. It's easier to sell than it is to buy in the market. at the moment, generally, in respect to clearance rates. But look, we've had a strong period. Winter's shown the usual slight easing in activity, but probably not as much as we would expect. And that's still building on the catch-up energy that's driven our markets this year, given prices are still below their previous peaks just in Melbourne and Sydney. And I expect that to be matched over the remainder of the year. But if we look a little closer at the data, Michael, Sydney had another big weekend of auctions, 778 auctions, Michael. That's another weekend high for the year so far. Good numbers. Auction clearance rates basically the same as the weekend before, slightly lower, 77%. Very good result there. You know, when you're pushing nearly 8 out of 10 properties selling under the hammer on a Saturday, that's clearly a market that's favouring sellers with strong competition for property. And it means that, you know, you're getting a lot of disappointed buyers out there who are missing out, and then that they then move on to their next particular target. Auction numbers, again, as I mentioned, highest for the weekend, for any weekend so far in Sydney. Higher, of course, from the weekend before, and well ahead of where we were at the same weekend last year. So Sydney market keeps on keeping on. The clearance rate's nearly 20% higher than a year ago. Melbourne's an interesting market, Michael. Another big weekend of auctions in Melbourne, down a little bit from the weekend before. The Melbourne market has just started tracking slightly lower than through the beginning of August, just floating around about 70% at the moment. It was pushing more towards mid-70s, so we need to keep perhaps a little bit of an eye on that Melbourne market. Still good results, of course, and still reflecting strong competition for property amongst the buyers. But perhaps, as you suggested before, higher listing numbers are starting to impact that Melbourne market. Well, early days. I think it was interesting when we look at the regional breakdowns for Melbourne on the weekend, Michael. For the first time, we did start to see rising energy in the higher price sections of the market. The inner south and the inner east produced leading clearance rates at the weekend. And of course, they're the areas which have the highest price or the higher priced property strata. So I would expect to see more listings coming through in those particular prestige market areas, Michael. And I think that'll see the Melbourne story improve over the next month or two. But still something to watch out just at the moment. But early signs are that, as usual, the prestige market in Melbourne is starting to pick up some energy. Brisbane, same amount of auctions this weekend as last weekend. Clearance rate a little bit lower, but still a positive result there for Brisbane, as we know, typically produces lower clearance rates in its model. Adelaide, over 90% this weekend, which is, you know, even the 90% is a very good result for Adelaide, which typically tracks in the 80s. So another big result for Adelaide, again on lower auction numbers. And Canberra, again, the same auction numbers the weekend before, and a very similar clearance rate. I guess it's a bit of same old early days that we've been used to over the past fortnight, Michael, or so, in terms of the prospects for the spring selling season. But I think when we look at the trends, the Sydney market has certainly picked up over August compared to July. So no real sign there of an easing in Sydney. As I said, Melbourne's just tracked down a little bit from its mid-year trends, down from the mid-70s to the low 70s. And as I said, we keep an eye on that in terms of the revival of higher priced property, which, is, as usual, comes over the next month or so. Brisbane's steady in the 60% in terms of its auction market activity. And Adelaide, a big number on the weekend, as we said, over 90%. And Canberra's been tracking reasonably steady, although it was a little bit weaker last weekend compared to the August overall clearance rate. Yeah, look, some interesting start to the spring selling season. Perhaps not so interesting in terms of any change, Michael, but I do think that there's a clear consistency about the market now. Really, we've had that consistency for months, so no surprise. And, you know, maybe just a couple of question marks, small question marks around that Melbourne market at the moment. But there's no doubt that Sydney is a force, a very strong housing market. And as we mentioned, in terms of our house price modelling, are well on track to produce a 10% plus increase in its median house price this year, and likely an 8% plus increase in its unit price, which is a far different result, as we mentioned at the beginning, that many predicted at the beginning of this year.
Well, it's a third of the year left to go. And you mentioned the word consistency. I actually like that. I'm much happier with a nice, consistent market than the wilder fluctuations. So I look forward to catching up with you again next week and hearing how it all transpires.
Thanks, Michael.